Hi, I'm Victoria Pertusa, community content producer at CI Live, and welcome to our Q&A session with Eric Iver, Global Head of Gas Consultant at S&P Global. Thank you for your time today, Eric. You've recently headed a first-of-a-kind objective and independent assessment of the market, economic and GHG emissions impact of the US LNG export sector. This study showcases that the LNG export industry in the US has rapidly developed since 2016 and contributed more than 400 billion to the US GDP and supported an annual average of 273,000 jobs and the potential of the industry doubling up by 2030. What are some of the key takeaways we can take from this study and the potential impact on the US economy?
Thanks, Victoria. To start out by giving you a view of the size of the export industry in the US, it's about $34 billion in terms of revenue. It's almost double the size of Hollywood TV and film exports. It's half of US semiconductor exports, which always surprises people, and it's larger than corn and soybean exports. So a really big industry. But when we think about moving forward, we're entering what we like to call the golden age of US gas and LNG. The US has 35 years of economic resource. It supports relatively low gas prices despite a few things really pushing demand. So first is AI data center and large load electricity demand. And then you have, of course, that doubling of exports that you talked about. Our study showed that an industry that will grow to support about 500,000 jobs a year and $1.3 trillion in contribution to GDP over the next 15 years. And interestingly, I think one-third of those jobs and economic growth are going to the non-producing states, and that's due to where the supply chain is located.
We lived through the Biden administration's US LNG regulatory pause in 24, and you quantify how much US LNG could move forward and the economic impact if the pause was eliminated, which it was indeed in January this year. What did you estimate the impact would be on the US economy, and where do things stand today?
Yeah, so in our study, we had expected about 44 million tons of US LNG moving forward. And what that would do in terms of economic impact is about 250 billion in additional economic impact to what I talked about. More than 100,000 additional jobs could join be added to the US economy. We're well on our way to that. So thus far, we've already seen about 35 million tons of new US LNG being sanctioned. And we're on the cusp of maybe another 20 million tons, potentially upside to that through the next kind of 18 months. So the numbers could be 20 or 30% higher than what we put in the study. And this study that it required a ton of work. It was an enormous effort. We had 80 people across the globe working on it in commodity insights, market intelligence, research and consulting, a really large group. It was used by both the Biden administration in its final weeks and then the Trump administration earlier this year, which was also cited in the final DOE study results that concluded that US LNG exports are good for the US and for global energy security. So a really good result there.
Besides government policies, another point of contention has been the impact of emissions of US LNG. What did the study actually find?
Yeah, I know this was an interesting finding. In fact, going in, we didn't know exactly what the answer would be. But it's first important to understand, what are the energy sources that would be replaced by more US LNG? And our detailed global energy system analysis showed that 85% of what the US LNG would replace in terms of energy would be fossil fuels from non-US sources. So not only that, the US LNG emissions from the increased US LNG exports actually led to lower cumulative GHG emissions over the next 15 years versus those alternatives. So again, US LNG ultimately was viewed as, in just a couple of examples, one is coal. And so coal is about 70% more emissions intensive than US LNG. And even we looked at a number of different coal sources to replace that US LNG all over the world. And even where coal was really proximate to the end use, the US LNG emissions intensity was better.
But what about methane emissions, which are, as we all know, particularly harmful to the environment?
Yeah, no. So certainly, one other thing we found was that methane emissions is what really determines the variability across the fossil fuel sources. And the US actually benefits from the frequent reliable monitoring we do have because it allows for the industry to react quickly and adapt. And we've seen a big commitment from the US producers, the US midstream, and the LNG exporters to reduce methane emissions. And just one example in the upstream, which is where most of the methane emissions come from, we've been doing work with Insight M over the last couple of years. And just from 2022 to 2024, we saw more than 50% reduction in methane emissions out of the Permian Basin. So again, the surprise finding was that US LNG is very competitive from a methane emissions perspective and getting more competitive as those reductions continue.
Now let's look ahead. What does the future of the US LNG industry look like, considering the potential of a ceasefire between Ukraine and Russia?
Yeah, so I think, certainly the US LNG industry is booming right now. And that's whether you look at it in terms of SPAs, whether you're looking at it in terms of investment, whether you're looking at it in terms of the trade agreements that have been done between the US and the EU, Japan, Korea, Malaysia. Those agreements included significant commitments to US energy imports. But there are risks, and certainly a Russia-Ukraine peace deal could have an impact, but it doesn't necessarily impact the US LNG industry depending upon what the conditions are. If it's accompanied by sanctions relief on Russian gas pipeline imports or Russian LNG, we think there's a significant impact. It could be over $100 billion of lost US LNG investment or US LNG investment at risk of that, of the big number that we talked about that we expect moving forward. And that, of course, would be displaced by more Russian pipe gas, more Russian LNG. But I think we are seeing the EU signal a strong move away from Russian gas and LNG, but it still needs to play out.
And now, what about other risks, such as the announcement of this week's progress on the Power Siberia 2 pipeline between Russia and China?
Yeah, so while the Russia-China announcement on the Power Siberia 2 pipeline got a lot of noise this week, it's huge. So it's just to give an idea of size, it's 50 BCM per year, it's 5 BCF a day. It is already considered in our forward-looking view. In fact, we have it coming online in 2031. It's less of an impact for our view, still an MOU, but it does signal that China's pivot away from US LNG continues and also that the US LNG's pivot elsewhere continues to happen. But there are some other risks that we're looking at. It's not just Russian gas and LNG and what's happening in China. So we're certainly focused on the regulatory and policy side. And that's not only the US, but also the importing countries in particular. It could be permitting GHG emissions and methane, like we talked about, as well as shipping. But we're going to have a lot more clarity from the US Secretary of Interior and the chair of the National Energy Dominance Council, Doug Burgum, and the US Secretary of Energy, Chris Wright. And we'll also hear from the Director General of Energy from the EU Commission, Ditte Jorgensen, at the private S&P Gas and LNG Forum at Gastech next week in Milan on September 10th. We're going to be discussing in a lot more detail these issues and ultimately how to further unleash more US LNG.
Perfect. Thank you very much for your time today, Eric.
Thanks a lot, Victoria.